Hey Patrick,
Hey Mark, hi, how are you doing?
I'm good. How are you?
Yeah, doing good, doing good. The sun came out, and yeah, it's so nice to have it on the feed and to enjoy it. So yeah, I'm in a good mood right now. I'm in a good mood.
hmm
Feels good. And yeah, how was your week in general?
Yeah, it's been it's been pretty good. The weather has been quite good this week, so I can't complain about that. So that's been really
Mm,
nice. And with regards to the market itself, it's also been up.
mm.
And there's also been a lot of interesting news this week. So yeah, I would say it's a pretty interesting week in crypto.
Yeah, cool. Then let's just dive in, okay?
Sure.
Okay, yeah, let's start with re remarkable things. I think you haven't made any big portfolio changes, right?
No, correct. So just to recap, I'm yield farming on Phantom with Bitcoin, USDC, and ETH and Magic Internet Money.
Mm.
I'm yield farming on Solana with Sol and USDC, and the rest
Mm.
is just Bitcoin and Illuvium.
And the Sol USDC, how much APR are you getting on this?
Yeah, very little.
Mm,
So yeah, I get part of it invested in Cropper. I think you get
mm,
like probably like 30% or something or 40%,
mm,
and the rest that doesn't you know, for the Sol USDC, you need a 50-50 split, but the rest that
mm,
doesn't suit a 50-50 split, that I am now doing long short farming. So what I'm doing is that I borrow Radium on Acumen for about 30% or 20%, and I'm supplying it to Tulip or Francium for about 70%. So
mm,
I'm earning roughly 20 to 30% on my Sol with this one.
mm. And you need to active it, you need to manage it quite active, right?
Yeah, it changes all the time, unfortunately. So you have to really
Mm.
pay attention to it.
Yeah, maybe take a look at so we talked about this offline of the podcast about juiced finance. Have
hmm
you considered using the protocol because they actually do what you do, but it's not that you have to manage it on your own?
Yeah, but the APRs are like 10% or something, right? Instead of 20 to 30. So
Mm,
yeah, I mean, it's definitely hands off, which is very nice. But and you do get a chance of an airdrop, I guess, so that's good. But the downside is that the
mm,
APR is significantly lower than what I'm getting.
mm,
So yeah, it just depends.
okay, yeah, makes sense. Mm,
What
yeah,
about you?
so I haven't made any uh, changes right now. Um, I'm considering putting 1% of my BTC more into ETH. I'm not right now at a point, but I think I may consider doing over the weekend, depending on my outlook for the next couple of months. And my outlook is basically based on what Julian is one of the CEOs of Cake DeFi, what he thinks about the market, and he gives out some estimations twice a week. And I haven't listened to the recent one, but it feels like that we could be out of the biggest slump. Obviously, there's still a chance, like 20 to 40% whatsoever, that the market crashes, but it feels like the sun comes out, the Fed raises the rates just once for now. Ukraine and Russia is not much escalating, so it feels like that a little bit of DCAing into more risk assets. It couldn't be the worst decision now. And yeah, it's for the long term. So yeah, I'm just thinking about this, but besides this, no major changes.
Okay, I've got a question though.
Hmm.
I think part of your ETH bullishness narrative is with regards to the staking, right? And the ETH V2.
Hmm.
Um, and you're very bullish on that, right? So you think the ETH price is going to go up a lot into the merge. So,
Um,
right?
yeah, kind of. Go ahead, finish your question,
Okay,
please.
sorry. Yeah, so why not play that through like Lido or something instead of playing it through straight ETH?
Hmm. So I think we can use this as a transition into remarkable things that happened this week, because this is
Sure.
actually one of the topics I noted down, and yeah, we can use this. So um, I don't actually think that the merge in the short term will be bullish for the price. I think ETH is highly correlated to BTC, and if the market goes down, ETH will go down as well, and the merge no one will care about the merge, and this is why I'm actually so bullish about it. So the merge brings. So first of all, there is this kiln testnet going on. Have you heard about it?
Yeah, yeah.
And as a quick explainer, so the kiln testnet is the last testnet, hopefully, before the merger happens. And the merger is basically the merge between the proof of work and proof of stake chain for Ethereum. And yeah, so the kiln testnet has two goals. They want to prepare basically for the production, and they want to ensure that yeah, everything is set up and that it runs nicely. They had a hiccup a couple of days ago, but not a major one. So this is just the status quo. So the merger is basically the transition from proof of work to proof of stake, and this brings two really interesting aspects with it in the short term. The first one is that right after the merge, there will be. So for now, if you deposit into the beacon chain, the Ethereum chain, right now, you can't withdraw your ETH, and this is where I think your question comes from, to be a little bit more liquid, right?
No, it's more that a lot of people and companies are staking for the interest that you get, when ETH becomes proof of stake, and
Hmm.
they use Lido as a tool for that to make it easy.
Hmm. Yeah, but Lido converts your Lido into a liquid version right now,
Hmm.
and
But
yeah, go
they
ahead.
stake for you, right? So you don't have to host your own nodes and stuff. So
Ah,
you get
okay.
part of the APR that they do,
Hmm.
right? So
Yeah, so I have no idea why they do it over Lido. I think it's for convenience. But I think if you are kind of technical, you can set up your own validator nodes and let it run. So I don't see any benefit of using Lido, but I'm not knowledgeable about Lido in itself. If they hire, if they, for example, offer higher APRs, I don't know.
okay.
Um, but in regards to the merge, and let me give you a quick explanation on why I'm actually long-term bullish, but short-term it's kind of whatever. Um, so after the merge, there will be no withdrawals possible, and there are roughly 11 million ETH right now locked into the Beacon Chain smart contract. And imagine that those 11 million ETH get unlocked. This would be a sell pressure of a couple of billions, right? And imagine a couple of billions getting unlocked when you actually deposited them for, let's say, when ETH was at about $500, now it's about 2.5K roughly. Yeah, a lot of people will withdraw. But the thing is that you can't make withdrawals within 6 months. But after 6 months, it's possible that roughly 30,000 ETH per day get withdrawn. And imagining a sell pressure of 30,000 ETH each day with a price of $2,500, there's a total daily sell pressure of roughly 75 million, so really big. So this is the kind of bearish, and yeah, I don't know what will happen in the short-term case. But why I'm so bullish about the merger, especially, and the merger is part of the Ethereum roadmap, because you mentioned Ethereum version 2. And Ethereum version 2 is basically the long-term roadmap, and the merger is just the first of 5 steps. But I won't go into much detail now. Um, so the merger is proof of work, proof of stake, and two main things will happen. The first one is that actually the issuance. So there is a daily issuance of new ETH. It's not that there is no new ETH every single day. Like with every new block, there is new Bitcoin. Like with every new block, there is Ethereum, and I think with every new block, there is also new what do I know, Cardano or whatever. So the issuance drops by 90%. So it drops a lot, and this is roughly equivalent to a triple halving for Bitcoin, because Bitcoin does a 50%, and if you do a 50% on a 50% on a 50%, then you get to the triple halving, and this is where the meme comes from. And the other point is that actually that you can make the case that if the daily, if the Gwei which the blockchain spends is at roughly 10 Gwei, and if we were in a bull market, it was sometimes multiple thousands, but roughly between above 100. So if the Gwei, so the price people have to pay in order to transact on the blockchain, goes to 11 Gwei or 10 Gwei roughly, ETH becomes deflationary. This means that more ETH get burned than issued, and this leads to a deflationary uh, is- issuance of ETH, and yeah, this basically means price goes up in a real simple term. So this is why I'm short term kind of up, bearish, whatever. I don't know how many people will withdraw, because on the flip side, you will get roughly 10 to 20% APR on your ETH. So this is really good. This is a really good incentive to stake. And if less people stake, your APR gets even higher. So yeah, short term, I have no idea. But long term, and by long term, I mean for the next 12 to 18 months, not the next 60 months. I'm really bullish on the price because having 10 Gwei and having the triple halving is just from a game theoretical point of view insane. And yeah, this is kind of why I'm bullish. Was this helpful, or was this too much rambling?
Um, No, this is helpful in terms of to help me explain why you're bullish longer term but not shorter term.
Mm,
And I didn't fully realize that it was locked. I read the Taiki tweeted about it, but I didn't look into it.
mm.
Um, do you have any idea what percentage of total ETH is staked that will come to unlock?
Yeah, so let me get a little bit technical, but I try to not do too technical. So roughly 10% of all ETH is staked right now, 10%. Um, in regards to how many ETH gets unlocked, that's totally up to the market. Um, if everyone wants to withdraw, yeah, then basically 100% gets
Mhm.
unlocked or withdrawn. But the real technical answer is the following. So 900 validators every single day can withdraw, and 900 validators can each withdraw 32 ETH every single day. And this is, if you multiply the 100 by 32, you get to 28,800. And this is where the roughly approximated maximum 30,000 each day come from. So
Okay,
to, to,
okay,
to make it really concrete, every single day, 900 validators can withdraw up to 32 ETH. If they do it, if they won't do it, it's up to the market. But this is the daily limit that can get thrown to the market.
okay. And when you will have at 10 Gwei or 12 Gwei, when you have a negative negative emissions basically.
Hmm?
Um, what percentage of the total ETH gets burned every year, do you expect?
So at 10, you have a equilibrium, so basically zero. Um, so below means that it's expanding
Hmm.
because more ETH get issued than uh, yeah, burned. And if you go above, yeah, it's basically a really crazy function. It's like yeah,
Okay. So,
you you can take a look. Sorry, 1 second. You can take a look at ultrasound money
mhm.
and just put it to Google, and there is quite a complicated calculator
Okay.
where you could where you can put in the Gwei and the days and stuff like this, and then it spits out the number on the difference between the issuance and what gets burned, and you see it in a really nice visual way. It's tough to explain because it's a math function based, and yeah, it's tough via voice. But please go to ultrasoundmoney.com, and then you have a really nice visualization of it.
Cool. Thanks for the recommendation, Patrick. Yeah, I'm pretty
Yeah,
curious to
sure.
see what percentage gets burned each year, because I
Mm,
heard some stat that it takes like 30 years before everything gets burned, and in that case, it's only like 0.3% then that get burned
mm,
each year. So I wonder how much by pressure 0.3% per year will generate. So
mm.
I need to look into it. But thanks.
Yeah, you're welcome. Okay, yeah, I have another topic, but I think in regards to time, let's skip it. Yeah, what about your topic? I know you have a pretty big one, right?
Yeah, sure. So this week there was a blog from Arthur Hayes. I think we've talked about him before, but he's basically the CEO of BitMEX, which is an exchange which allows you to, trade crypto derivatives. And his blog is called Energy Cancelled, and he's talking about the recent developments with Swift.
Mm,
That they are basically freezing U.S. Russian foreign reserves. So I will give a synopsis of his piece. It is a really long piece, but yeah, he's a really good author, so it's not a pain to
mm.
to read his pieces. It's really nice to read actually. I'd like to read a book from him at some point, if he ever does his
Yeah,
memoirs or something. But
yeah, he has a
yeah,
cool style.
Yeah, yeah, it's a cool style. So basically, he's saying that the United States and EU, they froze the Russian foreign reserves, right? And
Mm,
that because of this signal, this is something that has almost never happened before.
mm,
Other countries, they will become wary of buying treasuries, um, because they can see the same thing happening to their reserves if the US or EU stops liking them at some point in the future. So,
mm,
and what they will do instead is buy commodities, um, like gold, but also like industrial commodities, for instance, like everything that you can store, grains or gold or metals, they will buy instead of treasuries, because at least these things you can't confiscate. And
mm,
by doing this, this puts a permanent buy pressure on these goods, right? So the
mm,
price of these goods will slowly rise, because yeah, they probably don't want to buy it all at once because that will spike the price, of course. So he expects the price to rise slowly of these commodities, and he's talking about that. And it's also something that you mentioned, Patrick, that Bitcoin is right now not an inflation hedge. It's more correlated to
mm,
big tech, right?
yes.
To the Nasdaq or whatever.
Unfortunately for now, yes.
Yeah, exactly. So what he says is that he expects Bitcoin to fall as the Nasdaq and stuff also falls.
Mm,
But a bull market in gold, because the treasuries, I mean, because the governments keep buying it, and also normal increases in nominal rates, like the Fed hikes that we've seen, and stagflation, which is basically inflation plus a recession or depression. He says this will
mm,
break the correlation that Bitcoin has right now with the Nasdaq. And
mm,
countries that lack the ability to access and trade and store gold efficiently, because it takes a huge infrastructure to secure gold and to obtain gold, and
mm,
yeah, and to store it safely. They will gravitate towards Bitcoin instead as a way of storing wealth, basically. And but also what's interesting, he expects there to be still one big dump soon, basically, due to the war.
mm,
And he expects all assets, including Bitcoin, to dump. But on a
mm.
medium term, he's
Also
very
gold?
bullish. Sorry, yeah, also gold. Yes,
Mm,
all assets. He expects a correlation of one between all assets, basically, which means
mm,
it's basically what happened in the great financial crisis, for instance, or the Corona crisis, when everything dumped,
mm,
even gold, Bitcoin, tech, stocks, everything dumped. So he expects one more event like this, and then yeah, and then he's very bullish on both gold and Bitcoin. So
mm,
that's basically the synopsis of his story. I think it's
mm,
quite interesting, and a lot of it does make sense. Uh, at least the treasury part, I can definitely see that foreign holdings of treasuries, yeah, they just must, you know, reduce further, and yeah, that
mm.
has definitely impact.
Man,
Um,
that's so. Sorry, go ahead,
no,
please.
no, no, go ahead, go ahead.
That's so much above my pay grade, this macro stuff.
Okay.
Um, I have a basic question. So I know that that China holds a lot of um, US bonds, right?
Yes.
And I'm wondering if it was true what he said, then that would actually mean that China would get rid of his bonds and buy commodities, or what's the what's the meaning for China
Yeah. So
out of this?
basically, China needs because China is a net exporter, right? So they export more than they import.
Mhm,
So they need dollars. They need to buy dollars to do their exports. So they
mhm,
are a net buyer of dollars, and they buy that through buying treasuries. But in the future, what they will do is they will let the treasuries expire and use that money to buy commodities instead,
mhm,
and then buy it in their own currency, if possible.
mhm,
So do more like trade with other countries in a one-to-one basis
mhm,
on their own currencies, right, instead of the dollar. So
mhm,
basically, I don't think they're going to sell all the treasuries, because that they would shoot themselves in the foot as they start if they start selling treasuries, they will basically shoot themselves in the foot for the rest of their treasuries, and they have trillions to sell, so they
mhm,
cannot just sell it all. So
mhm.
I
Fair
think they will
point.
just let it expire, because a lot of it is relatively short-term treasuries, right? So like 2 years
Mhm.
or something. So
Okay.
yeah, they will basically do this.
Mhm. Interesting. And the commodities, what does this mean? Does this mean oil, food, Bitcoin, gold? What does this mean, commodities?
Yeah, commodities. Yeah, I mean, a lot of things are commodities. Commodities are basically physical goods that you can that you can consume or you can store. For
Mm,
instance, copper, like for instance, metals are commodities, or grains or foodstuffs like cacao is a commodity,
mm,
coffee is a commodity. So um, basically, a lot of these things, it's hard to increase the supply a lot. Basically, like for instance, gold. There's only so much gold in the ground, right? And
mm,
it's you can't just simply increase the supply by too much. So
mm,
basically, they want to invest in these kind of commodities that they either use themselves in their industry, like copper or in
mm,
oil, or things that to do just store, like a monetary metals.
mm. Interesting. You can't store trillions in cacao, I guess, right?
No, I mean they do have like a huge grain storage where they have billions, of dollars of grain stored,
Wow.
and also other things like pork bellies and stuff.
Mm.
But cacao, I'm not sure how long you can store it. I guess not too
Yeah.
not that long.
I'm a I'm a- I'm a big buyer of cacao, so every day I eat roughly 50 grams of dark pure cacao. So yeah, they would have a buyer.
Your long
Don't know
chocolate,
about billions, but
yeah,
yeah, I'm DCAing into it for the rest of my life, I guess.
yeah. I mean, your long chocolate and short oil because you walk and you buy cacao and you don't take the car.
Exactly. Yeah. Yeah. Really long. Yeah, that's nice. Yeah. That's funny. Awesome. Yeah. Okay. Yeah. Do you want to transition to exciting things, or do you want to talk about remarkable things even more?
Um, I have just two short points that I want to just mention.
Hmm?
First of all, another big thing that happened this week is that Anchor, which is a yield generating protocol on Terra, it is going multi-chain. In fact, it has already launched at the moment on Avalanche. So right now on Avalanche, you can deposit your wormhole UST there, and you can get 19.5% APY.
Hmm.
And what happens under the hood is that your wormhole UST gets transferred to the Terra blockchain and gets stored in the Anchor there. But you don't
Hmm.
need to use Terra Station, a wallet or something. You can just use your MetaMask on Avalanche. So this is quite a nice way to use Anchor without having the fuss of the their whole weird Terra Station
Hmm.
wallet. So this is something that's nice. And yeah, as Anchor goes multi-chain, I definitely I'm really interested to see what this will do to the yields on those chains, right? Because
Hmm.
I mean, if you have this kind of option, like how will the other farms react? Basically, they'll need
Hmm.
to offer higher rates if they don't want all the drainage to go towards Anchor.
Hmm.
So,
Yeah.
what do you think about this?
I have two quick comments. The
Hmm.
first one is have you actually included Soluna into your yield farming sheet?
No, not yet. I
Mm,
need to do it. You're right, but
because I'm on the page right now, and this is actually a way on how to access Anchor basically through the
mhm.
Solana chain, and you get 45% right now on your UST,
What?
which is crazy. Yeah, yeah, 20% in UST and 26% in the Soluna token.
Mm.
So this is the first one, and I'm wondering. So the oh man, this is a big topic, but let's keep it short. I have a question for you. So I think the problem of Anchor is not that they have too little deposits, right?
No.
The problem of Anchor is actually if they expand into more chains, more people will deposit, and then yeah, the other side of the equation, like the backing of the assets, like the Luna, and they wanted to diversify to get a little bit more collateralized. Yeah, what if they expand to a lot of chains? People deposit because they want to get a yield, and they just burn through their reserves like double or triple as fast as just being on Anchor. What do you think about this?
Yeah, it's interesting. On the one hand, I think the yields they must go down, but on the other
Mm,
hand, they like Do Kwon sees this as like an acquisition, like in the same way that like Uber's give discounts when you use the service and stuff. They basically use it as a marketing tool to get high TVL and to get a lot of attention for that UST stablecoin. So
yeah, but
um,
that's my point. I think that's actually makes no sense because you have enough attention for UST and you have enough attention for the APY. The problem is the backing of it.
I mean,
How do you get more attention to the backing?
I mean, the backing, they will just keep throwing money in the incinerator basically to keep it backed, right? So
Yeah,
they can
exactly.
continue to do this for a while. So it's definitely, yeah, like you would expect it to just to drop, right? And I do expect them to do some proposals, just like the one that Arca proposed, but it was shut down,
Mm,
where smaller holders, they get the full APY, but if you dump like a billion, then you're not going to get the 19.5%. You're
mm,
going to get reduced. So I do think these kinds of proposals will happen where they tweak the rates for bigger suppliers. I do expect for smaller holders like me at least that the rates will remain like maybe above 18 or something percent for the
mm,
next 6 months or something. And yeah, you're right, but I don't think they consider themselves big enough, Patrick. I think that they want to be at least bigger than Ethereum, TVL, and also USD is not even the biggest stablecoin yet, not even close. So
mm,
I think until USD is the biggest stablecoin, they will keep their goal of doing everything they can to
mm,
promote USD. So and right
mm,
now I think USD is only maybe like 15% or something. It's the third biggest after USDT, but
mm,
it's way behind USDT still, and not even to mention USDC. So I think they will keep it up until USD becomes bigger than
mm.
USDC.
Yeah, two-sided marketplace, really interesting business model.
Yeah.
So in the real world, my business partner and I, are we we've built up multiple two-sided marketplace, and this is why I'm so going into the details, because yeah, it's basically two-sided marketplace, and a lot of the times you don't have the problem on one side. You have like 95% demand on the one side and 5% of demand on the other side. And to keep the balance, sometimes business models get wrecked because they can't do it, because they can sustain it over the short term by having, yeah, like what the other guys did a couple of weeks ago, like depositing 1 billion into Luna to increase the backing, but you just can't do it like once, twice, three times, I don't know. And yeah, maybe in the future it's not that possible. So, but yeah, I think neither you and I, we are an expert about Luna and USD, right?
Yeah,
And
correct. I really need to learn more about it though, because it's the biggest like chain after Ethereum,
mm,
and we don't know enough about it.
yeah, that's true. Okay, okay. Yeah, so I just noted down for myself. Patrick, deposit something into Soluna because 46% is insane on
Yeah,
stablecoins, and yeah, so this is probably what I will do after our podcast. But for now, yeah, do you want to transition to exciting things, or do you have another topic to share?
sure. I got another topic to share, but could you start first?
Yeah, I just have an exciting topic I would like to share. Um, I will keep it brief. So we submitted our proposal to the Riptide Hackathon. So actually, our website is live. It's an MVP version, which makes me super excited. It's really so MVP stands for minimal viable product. So you basically have a version which looks really ugly. The UI and the UX is pretty bad, but you are testing for the fundamental hypothesis. And our fundamental hypothesis is that yield farmers go to the website and use the website in order to adjust the yield farming on a daily or weekly or whatever basis in order to get more yield. So you can check it out at crypto.pinetco.dev. And yeah, for now we included just three protocols because we're in the development phase. And for now we included Radium, Tulip Garden, and Orca. And yeah, just take a look at our website if you want to. You can filter for token types. You can filter for pair types. So let's say, for example, Mark, you're looking for a better farm for your Soul USDC farm, for example, that you mentioned. You can go there, just put in Soul Other, and just type in USDC. And then you see, for example, that you can get 57% right now on Cropper, and not on this sheet, but on your sheet. But it's basically the theory behind it. So you see new farms, and yeah. So this is something which makes me super excited. The submission deadline was yesterday evening, so yeah. Hopefully we will hear back from them of Riptide, and yeah, let's see where this all goes. Like I said, for now, if you're looking for yield for Radium, Tulip Garden, and Orca. Just check us out, and if you have any feedback, jump into the Discord. Let us know what you think, and yeah, we're open for feedback. Don't just kiss our ass, please. Try to be honest, and if it sucks, then say it sucks, and if it's great, say it's great. But yeah, I'm looking forward to meeting some of you guys there. Yeah, would you like to comment on this, or if not, totally fine, go into your topic, whatever you prefer.
Um, yeah, I would like to just say that it's quite bare bones at the moment. If you go to the site, it's like literally an MVP. So we still have a lot of work on it to improve
Mhm.
it.
Yeah, absolutely. Okay, perfect. What is your topic? Or what are your
Yes.
topics if you have more?
No, I have one big topic. So I'm excited about a website called geckoterminal.com.
Mhm.
And I mean, I discovered it already a long time ago, but I never really took a good look into it. And the site is an
Mhm.
alpha site, so maybe they'll become paid at some point, but they have really good data. And what they do is they show in one overview the DEX volumes and liquidity for almost all the chains, like all the EVM related chains. I think they just get this data from the graph, but I'm not 100% sure. But it's
Mhm.
really, really interesting. So what I want to do this weekend is I want to figure out like which chains have the best stablecoin yields, the best ETH and Bitcoin yields, for instance. Um,
Mhm.
and I want to see if I can, yield farm there because I still think personally I really like depositing on a DEX when you have like a swap fees on a
Mhm.
one-to-one like USDC, USSD or something. I think this is really the basis of DeFi. Like this is where real money
Mhm.
is coming from. Is from people swapping. It's yeah, it's true commerce basically, and
Mhm.
it's not incentivized by anything. So I think if you can find a good pool, and last week there were some insane yields on the Metis chain because there's a lot of activity there. You could get
Mhm.
yeah, like a couple of 100% APR on swap fees due to people swapping so much.
Mhm.
So I'm really curious to explore that further.
That's super interesting that you mentioned that. Yesterday evening, I had basically the same question in mind. I was wondering, and this is really interesting. I was wondering which pairs have the highest volume to live off of the trading fees, because it's the bare one, what you just said. So, if a quick follow-up question to the Gecko terminal, do they have something similar that we are trying to build, where you can see different farms in the APRs, or is it more like the volume and the swapping fees, so not like the APRs of different pool farms?
No, it is no farms. It's just
Mm,
purely the volume and liquidity, and
mm,
it doesn't even have the swapping fee. So you need to check for each DEX what their fee structure is, right? Because some, like for instance, I'm checking right now, and I see that that like MIM USDC, for instance, has a lot of volume of Phantom,
mm,
but I'm pretty sure, and it's on Solidly, and I think Solidly has only like a 0.1 percentage swap fee for
mm,
the for one-to-one pairs, basically like
mm,
MIM USDC. So it looks like there's a lot of volume, but the actual fees are probably very low. So this is why you need to
mm,
take a little bit extra effort and figure out the swap fee percentages for each DEX
mm,
because they can vary a lot.
mm.
It's not just the
What?
0.3% that you're expecting.
Mm, understand. I've never seen really good swap fee APRs, which were interesting to me. It's more like 2 to 5% roughly. Would you agree? Would you disagree?
I mean, I think it depends on the type of pair. Like if you mean stablecoin swap fees, then yeah, usually they're quite low. Usually they're below 10%. But
Mm,
there are opportunities sometimes when it becomes more than 10%, like 20 to 30, but it usually doesn't last long.
mm,
But if you're talking about a stable plus a volatile asset, like USDC Solana or something, or USDC Phantom or USDC ETH, no, maybe not USDC ETH, maybe some of more most of the other gas tokens, then you can already get pretty high rates sometimes. Like Solana USDC is probably roughly right now, I would say probably around 15 to 20%, which is quite low. But in the past, it has been 50%. I've definitely seen it for
mm.
quite a while. And Phantom has also
50.
been, yeah, 50. And
Mm,
yeah, so there are periods of time where it is really high swap fee for longer periods. So yeah, it
mm,
just depends. Yeah, it really depends on the timing.
interesting, yeah. If you have some good alpha, let us know.
I will let you know in the Discord.
Okay, perfect. Yeah, do you want to transition to our portfolio challenge and keep it a bit shorter today?
Yeah, sure, let's do that.
Okie dokie. Do you want to start?
Yeah, sure. Let me start just like we do traditionally. So we're already at podcast 18, and
Mm,
last week my dollar value was $718, and now it's 743 roughly. So I gained roughly 25 bucks, which is around 3.44% increase. So yeah, I did pretty decent in dollar terms, but unfortunately, Sol went up by a lot more. It went up by around 8.5%. So I underperformed
mm,
Sol by yeah, by quite a lot, by 0.4 Sol. So
mm.
yeah, I'm doing quite poorly in terms of Sol at the moment. Yeah, I wonder if the market is going to keep going up or if it's going to go down again.
That's a
It's
question.
almost impossible to predict for me. So
Mm,
yeah, I'm really doubting. Should I now get less stables, get more
mm,
stables, get more Sol, get less Sol?
mm,
Yeah, I have no clue to be honest.
mm. Um, I just made a funny observation. So at the start, we started both with 5 Sol, right?
Hmm.
And our goal is to outperform Sol and maybe to even increase our portfolio while Sol goes down. But yeah, this would be not that interesting for our listeners, I guess, because then we basically go into stablecoins and try to do decent stuff with our stablecoins. And yes, so right now you are sitting at 8.3 Sol. So since our first episode, you basically made a 3.3 Sol, which is nice, which is really nice. Do you want to take a guess on where I sit?
Well, I don't need to take a guess. I can see the numbers right in front of me. But unfortunately, you're almost back to where you started.
Yeah, exactly. So for you, it's like from 5 to 8, which is quite nice. For me, it's from 5 to 4.93. So yeah, what a waste of time, I guess. And yeah, but I'm doing airdrop hunting, and this is my strategy. So I'm still sitting in Chest Finance. They actually announced that there will be an airdrop. I'm sitting in Friction. I'm sitting in Katana, and I'm also sitting in Frankium. And none of those have a token right now, but I think they most likely will have one in the future. So yeah, one day, Mark, my friend, I will go to the moon, hopefully.
Yeah.
And yeah, till then, I need to be patient. And the interesting point is that in regards to dollar terms, you actually, so my dollar portfolio is at $440, and yours is at $740. So you are ahead of me by roughly 300 bucks, which is yeah um quite massive. And yeah, for now you're doing good. But if we go into a more positive environment, I think I will outperform you week by week by week because yeah, you're sitting half in USDC, and I'm basically sitting more risk on. But if the market goes down, you will outperform me more and more and more. And I was just it's just exciting to see that if we reflect on it, not on a weekly basis, but more on a yeah 18 weeks, that's roughly a third of a year, right?
Yeah.
Um, if you reflect on the last 4 months, you basically did an awesome job, really, really awesome job. And I did a kind of, I could have enjoyed the sun the whole time, a job. So, yeah, that's basically the TLDR. With different approaches, we don't change it for now, and I think we will just stick to our bets. And yeah, if we change something, we will let you guys know. But for now, I think that's all we can say about the portfolio challenge, right?
I have one more thing to say.
Yeah, sure.
Not about the challenge necessarily, but about yeah, about the performance. I check the TCAP like every day, and I can see both the Oracle price of TCAP. So that's basically the price that you can see on CoinGecko for all the tokens combined, right?
Mm,
The market cap of total crypto. And the number today, it was the same number as it was in May last year.
mm,
So if you bought TCAP after the market started dumping in May, then and you held it until now, you would have
mm,
made 0% return.
mm,
So yeah, it's just really incredible that
mm,
we're almost a year later and the crypto market cap hasn't increased. So
mm,
yeah, yeah,
mm,
I totally. If you were to ask me last year, that I would never expected this. I would expect it to go up a lot. So
mm.
yeah, the market is still very different than I expected.
I think you're doing yourself a disservice by taking a look at two specific um, what's it called, snapshots, because if you compare the end of May and don't take into consideration what happened before, and if you don't take into consideration what happened over the last 2 months, and just compare it from year by year basis, I think, yeah, you can say, okay, that's it, that's a fact, we are at this, but to make an extrapolation out of it that over the next month we will go down, up, I don't know. But that's not what you're suggesting, right?
No, no, I'm just saying that historically, crypto hasn't
Mm,
been that great over the last year, if you
mm,
look at it from this angle.
yeah. Yeah. If you want to have more nuance, one comment about this. Do you want to take a guess on what is one of the worst performing assets this year so far?
One of the worst performing assets. Are you talking in crypto or outside of crypto?
The whole world. One of the worst performing assets this year.
Uh, the Nasdaq maybe?
It's actually crypto.
Oh,
Uh,
really?
Crypto
Okay.
in itself, you couldn't made a worse investment basically than going into crypto. And this is kind of mind blowing. So if you take a look at the 1 year performance, it's different. But if you take a look at the year to date, crypto is one of the worst investments that you could have made. And yeah, this doesn't mean anything about the future or the next months, but it's just as it is. And yeah,
Yeah.
so the times, the time component in it you can adjust it however you want to. If 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 you take a look at year to date, crypto is totally wrecked. If you take a look at 1 year, it's nice. If you take a 10-year horizon, it's fucking awesome. But yeah, yeah, always the time proponent is pretty interesting for me at least. But
Yeah.
maybe I'm just too small brain to understand the time
No,
component in it.
I don't think so. I think you just have a longer time frame, just like Raoul, you know. And in those time
Mm,
frames, yeah, it's very likely that crypto will be up.
mm, yeah. Okie dokie, do you want to wrap it up?
Yes.
Okie dokie. Yeah, quite short episode. Um, there's not so much going on. If you have any questions whatsoever, jump into our Discord. Right now it's quite quiet, and yeah, we're happy to hear from you. And besides this, yeah, enjoy the sun, folks, and see you next week. Bye bye.
Bye bye.